us on what to expect from the local market today. We're joined now by Stan Shamu from IG in Melbourne. Stan, always good to see you. Just focusing in on those currency markets. Firstly, in the euro, we're seeing it drop to its lowest level since April. What particularly was behind that?
Morning, yeah, absolutely. There was quite a few factors at play, and I think the Eurozone was possibly the main point of focus. Of course, we didn't actually get much out of the US apart from optimism about the earnings season. However, in Europe, we had ECB member Asmussen on the wires. He had quite a few comments to make about the Eurozone economy and some of the ways that the ECB is looking at stimulating the economy. Of course, he did come out and said they are looking at a lot of non-conventional ways or instruments to help stimulate the economy. And this was taken wasn't taken lightly at all by the market. I think a lot of investors out there started feeling that there's some easing on the way. Of course, at the same time, he did say that the forward guidance being provided by the ECB is looking at further than 12 months, and this really was a bit of a game changer for traders in the euro. At the same time, he didn't rule out the fact that we're looking at a second round of LTROs. And as a result, the euro dollar dropped from around 128.5 to its lowest since April, which is at about 127.5. So it certainly seems like there's quite a lot of action in Europe. The situation wasn't also helped by that S&P downgrade of Italy's rating from BBB positive to BBB. So that really saw the single currency on the back foot as well. And this massive drop in the euro did help the dollar index rally further to about 84.64. So it really does look like the US dollar continues to benefit from all angles at the moment.
It is a big day for Asia, China in focus, and also Japan.
Yeah, absolutely. We've got this morning monetary policy meeting minutes from Japan. They should be looked at with interest, particularly as the BOJ also kicks off its two-day meeting, which will be concluded tomorrow with a press conference. It really does look like Japan's approaching a key period for the year with those upper house elections out in a couple of weeks. That will also be looked at quite with a lot of interest, really, because of course Japan's one of the key economies in the region, and of course we know they're targeting that 2% inflation over the next year or so, and should they manage to remain on track, then this could be a bit of a game changer for the region today. And of course, if there have been a growing number of analysts who feel that the BOJ will not do anything further on the easing front for the rest of the year. So that will probably be something that investors will be looking for comments or hints from some of these comments out of the BOJ today. We've got the dollar-yen hanging around the 101 level, just slightly above that, very sidelined, and that really just highlights the uncertainty that investors have going forward about Japan and what they plan to do. On the other hand, it's also a big day for China. We've got their trade balance numbers due out at midday today. Now, the trade balance numbers from China are always very tricky for Australia because whilst a better than expected read is always something good to see from China, at the same time we also like to see the fact that they're importing much more than they're exporting, and as we benefit from our exports that China in turn imports, then definitely that will be something a bit more positive. So we'll really need to look at how much they're importing, particularly from Australia, and from the raw materials perspective and resources. That will be what we'll be looking out for. And this will probably have a bit of a bearing on the Aussie dollar, which is outperforming the risk space at the moment. It traded at 92 overnight. It's pulled back slightly from that, but should we get some good news out of China and Japan, then we could see a continuation of an Aussie dollar rally today.
What about the ASX 200? What's your opening call?
At the moment, we're calling it up 0.3% to 4,895. Now, that's just shy of that 4,900 level, which we feel is the key near-term resistance. We're likely to see relatively subdued trade until we get a clearer indication of what to expect from Japan and China. That might be the key catalyst for the region today. Of course, the materials space will be key to whether or not the market can rally through this 4,900 level, or whether or not it will become resistance and we'll see a bit of a pullback from that level. Of course, we've had a good few days so far, and as it stands, BHP's ADR is pointing up about 1.3%. Iron ore was up about 1.2% overnight, so that should be quite positive for the iron ore names as well. Of course, the yield plays have continued to do fairly well, particularly with the banks and the consumer staples, but we really need these miners to participate in the rally for us to be able to continue moving higher in the short term. So that's something to look out for. And at the same time, we've got the Westpac consumer sentiment reading due out today, and that should be quite interesting to watch, considering recent readings from other banks like the ANZ job ads and NAB business confidence have disappointed. So it should be interesting to see if the Westpac consumer sentiment shows us something different. In the previous month, which is May, it was up 4.6%. So we'll have to wait and see whether or not they can continue to see an improvement, whether or not the economic pressures that Australia is facing will see consumer sentiment remain subdued in June.
All right, always great to get your thoughts. Thanks so much, Stan.
Cheers, buddy.
Stan Shamu there from IG. All right, let's remind you of the close we saw on US markets, and the Nasdaq rallying to 13-year highs. They're up 0.5%. That figure isn't actually correct, though, that Nasdaq figure. Of course, it closed at 3,504 points. The S&P 500 was up 0.75%, and the Dow up 0.5%.